Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Some of the stories we're tracking for you now in the BNN Bloomberg newsroom. It's what so many people have been waiting for. SpaceX, that's set to begin trading today. It was supposed to start probably at 10, but still nothing yet. Elon Musk's rocket, satellite, and AI company raising the largest ever amount in an IPO, $75 billion US. Bloomberg reports SpaceX shares are priced at $162 now and will trade on the NASDAQ under the symbol SPCX. The deal values SpaceX at about $1.77 trillion, making it the seventh most valuable company in the U.S., ahead of Tesla. Musk, of course, is involved with that as well. There's renewed hope for a deal between the U.S. and Iran to reopen the Strait of Hormuz. This comes ahead of next week's G7 summit in the French Alps. Iranian state media says the draft includes a commitment from the U.S. to lift oil sanctions, and Iran would reopen the strait within 30 days. U.S. President Donald Trump says that a deal with Iran will be reached this weekend. The federal government has unveiled a $3.2 billion plan to address food security and the high cost of groceries. Food is 31% higher than it was in April of 2020 when we were in the middle of COVID. Prime Minister Mark Carney says a country that can't feed itself or fuel itself or defend itself isn't truly sovereign. He says to protect that sovereignty, Canada has to take control of its food system. All right, a quick look at the markets and the TSX on a nice little run today. It's now up by 0.96%, and pretty much all the indices are in the green, save for tech. And in the U.S., everybody is jumping right now after an up and down morning. Look at the Dow. It's up more than a point, and the NASDAQ is up by 0.38 right now. Of course, SpaceX launches today. Its IPO set at $135 US, but looks like it might even be higher than that. And it's estimated to be about 4 times, even 5 times oversubscribed, according to Bloomberg. Here to talk about that and more is Michael Decter, portfolio manager and founder at LDIC. Michael, thank you very much for joining us.
Pleasure to be with you.
What a day, SpaceX. Your thoughts? I don't even know what to ask anymore about it. I mean, this is the day that so many people have been waiting for. What do you think is going to unfold today?
Well, it sounds like it's well oversubscribed, so I think it'll open higher. That's in the very short term. But there are a couple of other big deals coming behind it, Anthropic and OpenAI. So what we're going to find out, I think, but it'll take a week or so, is how much of the demand was from short-term market players looking for a quick pop, and how much of the demand is for people that are longer-term investors. So I think no doubt it'll trade higher in the first hours and days, but whether it'll build a following and stay higher is going to depend on how the company does, and that's not going to be apparent for a while.
And what's your feeling on that? Are there a lot of short-term or people looking in it for the long run?
It's hard to tell. I mean, NVIDIA became almost a cult with people having parties to celebrate each leap. I don't know if SpaceX has got that kind of potential. It's a more complicated company, and we didn't play on the deal. We like things where we can see earnings and we can see a track record and dividends, and we stay away from speculative new things. Now, SpaceX is a very large speculative new thing as a publicly traded company. And so you're really betting on Musk. And on one hand, he's shown real sparks of genius. On the other hand, he's shown some difficulty, if we can say it, getting along with others. And maybe he's not the best guy for a publicly traded company at scale, but time will tell.
And I mean, and he has pretty much absolute power over SpaceX right now, doesn't he? There's really nothing anyone can do.
Yeah, no, you're giving them your money. It's a bit of a blind pool. I mean, it is going to be public, so there is an exit, unlike what has happened to other people in deals where the founder has full control. But yeah, I mean, it's at a scale that we haven't seen before. I mean, you have to go back to Aramco to find something even in the same ballpark. And that was an operating company with a long history. So different situation.
And with Anthropic and coming in, and I wanted to say ChatGPT. I've been saying it so many. OpenAI.
Yeah.
I've been saying OpenAI so many times. Is there room for all three of them, or do you think one of them is going to pay a price somehow?
Well, it's going to be a test of markets. We have some fears of inflation and the bond market, and of course, everyone's afraid of the bond market, or should be. But this will be a real test of public equity markets, particularly American equity markets and their capacity. And if they absorb these three deals, then I think that's a very big positive overall for the markets. We've been, I think, caught up in this AI trade and this seesaw trade of the Straits of Hormuz and the war. And one day it's about to be settled, and the next day they're back shooting at each other. So, one day oil's up and the market's down, and then the next day it reverses. So, the market is betting that there'll be a peace deal sometime in the next weeks or months. And they're betting that inflation will not be driven a lot higher by oil, that oil may have peaked already. But on the other side of that argument, we've been mostly not seeing the physical oil issue emerge. And there is the real possibility without a deal, even with a deal, you're going to see shortages of oil because it'll take a long time to rebuild the damaged capacity and to move oil to where it's needed.
And so what does the Fed do with all that? You mentioned about inflation and oil and all these pressures are on. What should investors be looking out for from the Fed? What are some of the concerns or risks for them?
Well, you've got a new Fed chair put in by a president who wants lower rates. On the other hand, he's a serious Fed guy, if you like, he's a central banking guy who will see inflation as a serious issue. So I don't believe anything will happen before the midterms. I think the new chair will say, we're looking at the data, and which is a great thing for a Fed chair to say. And if there's going to be a change in rates, and I think if inflation kicks up, rates will go up in the U.S. in the fourth quarter. And if it doesn't, they'll probably go down or stay flat. So, but nothing's going to happen in the short term.
All right, Michael, we're going to wrap it up there, but thank you very much for joining us.
Okay. Thank you.
Michael Dechter, portfolio manager and founder at LDIC. Up next, Adobe shares are trading lower after RBC cut its price target following earnings and a CFO exit. We'll have more on that. Well, shares of Adobe are trending down today after RBC cut its price target on the software company following its latest earnings report and a surprise CFO exit, raising new questions for investors. Here to break it down for us is Matthew Swanson, analyst at RBC Capital Markets. And Matthew, thanks very much for joining us.
Oh, thank you so much for having me.
It's been a tough run for Adobe, hasn't it?
Yeah. No, I mean, going back 3 years now since we kind of started the Gen AI conversation, it seems like they're fighting a battle on a lot of different fronts. And obviously, historically, one of the great things about Adobe has been kind of that lack of pure play competition, right? It's been much more so about how fast is the TAM growing than is what is their market share within creative. And so I think what we're really waiting for as investors is to see something that shows there's a net benefit to this current digital transformation. Clearly, some things are working well, some things maybe aren't. And until that total ARR line increases, I think that's really where investors are kind of going to get hung up on this stock.
All right, let's talk about what's working for them.
Yeah, for sure. I think if you really talked to Adobe 3 years ago and then talked to them today, looking purely just on a timeline and a roadmap of how they wanted to go about this Gen AI technology kind of revolution, I think they'd be pretty pleased with the way that they've executed against that roadmap in terms of getting generative video out, generative 3D, generative images, the integrations we've now seen between the Experience Cloud and the Creative Cloud, I think makes a lot of sense. Those two used to really be run as separate businesses. And I think they've now kind of put together in the enterprise a really intriguing value proposition of how Gen AI becomes what it ultimately needs to for all these companies, ROI, right? And really showing how creating these extra images can run value all the way to that endpoint in marketing, getting to the Experience Cloud, which really justifies the expense of the entire ecosystem. I think the area where we're probably seeing a little bit more challenge is in their strategy around the consumer side and in really being able to prove out that the consumer space with all these new entrants between point solutions, platforms, and then some of these larger walled garden creative tools isn't going to end up, getting much more bifurcated.
And are they heading in the right direction for that, do you feel, or do they? What changes do you think would you like to see with that?
Yeah, I think on the enterprise side, I continue to feel really bullish, especially on the Experience Cloud, which used to kind of be the secondary platform relative to creative. That creates a lot of differentiation for the company. And again, taking a very ROI focus for the enterprise, I think that's where you really see generative kind of wallet share shift, right? Is being able to actually prove out not just what can we do, right? We can make a lot more advertisements, more marketing material, more images, but why should we do it? And I think the why we should do it is really explained by those tools in the Experience Cloud. Now, on the consumer side, I think one of the challenges is we know for sure that there are more people creating images than ever before. There's more people utilizing creative tools than ever before. I think one thing we're still trying to figure out as a market is what maybe the difference is between mind share and where all the users are and what ends up being the wallet share, meaning which of these users are really going to be willing to pay for products long term. And I think that's where Adobe is sitting right now in terms of pushing through this freemium transition, which obviously had the impact on ARR last night in terms of their guidance.
All right, and let's talk about the CEO left and the chief financial officer. Well, actually, he's now left as well, didn't he? Sorry, he's leaving on Monday. What kind of an impact is that having, that transition and that change?
Yeah, maybe we'll start with the more recent one, just because that was the surprise last night, was Dan Durn leaving as CFO. So, it was announced right at the same time that he was heading to Marvel Technologies. Obviously, in terms of his 30-year career in finance, Adobe's kind of been the outlier, actually, in terms of a software company. He spent much more time within the semiconductor space. The nice thing with having a company the size of Adobe is they do have CFO of the Experience business, Steve Day, who's going to be taking over as interim CFO. You also have a CFO of the creative business, Karen Burgess. And so they have a lot more processes in place in terms of how things kind of rolled up in terms of running those subsegments, running the guide business. But it obviously is a challenge for a company trying to find foundation, trying to find its footing, as you mentioned, also going through a CEO transition to now have the top two executives, be exiting at the same time. We could see maybe this complicates the CEO transition a little bit more. We would expect the CEO to transition first before we would see anything happen from a CFO standpoint. And it does still feel like the most logical CEO candidates are internal.
Okay, and I imagine people start to question, is that them abandoning ship?
Yeah, and it's obviously a fair question. Anytime you see two of the top executives at a company that's had struggles from a stock performance standpoint, I think if you look at each of these in isolation, I think that Shantanu's exit was, pretty orderly in terms of the amount of communication that he had with the board, the timeline that he had from his announcement to kind of the period of leaving, and then also the fact that he's going to stay on with Adobe as the board chair. I think obviously the CFO side, the timing is unfortunate that it happened during this window of the CEO search, but it seems like an opportunity that one obviously came up with a time frame around it, and then also something that fit Dan's historical preferences, I guess, in terms of when you see what his jobs have previously been in.
And now you mentioned that likely CEO will come from inside. Is there any possibility they could go outside and maybe try and look at shaking things up, or do they want some continuity right now?
Yeah, no, absolutely. So, I mean, the two internal candidates that we've heard the most about are David Wadhwani and Anil Chakravarti. Both of them have been very present at Adobe Max, Adobe Summit. Investors know them, employees know them. I think the way you'd kind of look at those two is that David Wadhwani has the prior CEO experience and also runs the Creative Cloud side of the business, which I think is kind of more core Adobe. And so I think that would be very in line with what we've seen historically. Anil runs the Experience Cloud side of the business. And I think that would be maybe a little bit more, if it's internal, of a shakeup, just in the sense of acknowledging that enterprise, might be even more so the future. The orchestration layer of creative might even be more so the future of the company. But to your point, it certainly would be a time in terms of transitions and everything else that if they wanted to look outside and find somebody with more experience within the Gen AI standpoint, more experience with consumption models, there certainly are a lot of transitions happening within the company that some outside expertise might be, seen as valuable.
Okay, we have to wrap it up there, Matthew. Thank you for joining us. Matthew Swanson, analyst at RBC Capital Markets. Coming up, today's market drivers with Bloomberg's Matthew Griffin. Time to take a look at the market movers for today, and we're joined now by Bloomberg Equities reporter Matthew Griffin. Matthew, how are you, sir?
Roger, I'm doing well, waiting for SpaceX to open. How about you?
Yeah, it's so funny. We've got the Bloomberg terminal on it, and we're looking over it. I've got it pulled up, and it says, IPO positioning window started. It sounds so spacey, but nothing's moving right now. But Virgin, though, is plunging to earth, shall we say?
Yes, Virgin, this is Richard Branson's space tourism company, Virgin Galactic, down about 25% today, and there may be a SpaceX connection there. What Vonda Research says is you had strong retail participation in space names across the board leading up to the SpaceX IPO. They call out Rocket Lab, that's a rocket launch company, as a specific example, but it's been happening across the space. And there's a risk, they say, that this was just a proxy trade for SpaceX. Retail individual investors couldn't buy SpaceX shares, so they were buying peers and competitors. And now that they're actually going to get a chance to buy into Elon Musk's company, there could be a rotation out of these names. Also could be a source of funding to buy into the SpaceX IPO. And what one strategist also commented to me is there's also just a sell the news element. These stocks had really rallied. Virgin still up about 33% year to date, but of course falling today. Also stocks like Rocket Lab, like AST Space Mobile in satellite internet, all down red across the board.
All right, now back down to earth, Lennar falling, the home builder.
Yes, Lennar builds homes for people here on Earth because we don't have a Mars colony yet, and they are.
You want one though, don't you?
I don't know if I'm going to be the first to go. I'll stick around for a bit, but they are going to build fewer of these homes in the third quarter than analysts expected. Their delivery outlook was 20,500 to 21,500 homes. Wall Street was looking for more than 22,000, and it's the same headwinds that have dogged the home building industry for a while. Mortgage rates are high, so is geopolitical uncertainty, and that makes it unattractive on both counts for consumers to make large purchases like buying a home. So it's possible an end to the war in Iran could reduce some of these headwinds, but it hasn't happened yet. At least it hasn't been formally signed yet, and that's leaving companies like Lennar struggling. Shares down about 3% and down about 10% year to date.
Okay, and last one, CoreWeave getting a little bump on the NASDAQ 100 inclusion.
Yeah, so shares up nearly 10% last time I looked. This is the AI cloud computing provider. They're going to join the NASDAQ 100 prior to the start of trading on June 22nd. And that's something that can attract a lot of buying from passive funds that track the index, also from active funds that are benchmarked to major indices. Also, other names that are set to join also rallying: Nebius in the same business as CoreWeave, Teradyne and Astera Labs in semiconductors. Rocket Lab, though, which we were talking about just now, they're also set to join the NASDAQ 100. That, however, not enough to outweigh the negative sentiment about space stocks today, with the possible exception, as I'm sure you're going to talk about more later, of SpaceX.
No, we haven't talked about it all morning. What's happening with it?
Yeah, it's indicated to open, last time I saw, about 19% above the IPO price. That's, of course, a moving target. Probably swung a little bit since I looked at my screen, but we're just all waiting for those first trades to come through.
Indeed, and I'm looking at it, and it still says IPO positioning window started. So,
yes, it's something I actually yeah, had a story about this morning. Takes a bit for them to find that opening price. That's what Morgan Stanley is running that process. They're probably working on right now.
Yeah, and I heard earlier they said about probably around noon that it was going to be up. So we'll see how close it is to noon that it happens.
We'll see.
All right, got to go there, Matthew. Thank you, sir.
Thanks for having me, Roger.
Bloomberg's Matthew Griffin. Coming up, the biggest IPO in history. Yes, SpaceX. That's what we're talking about. Is it worth the price? Well, we'll hear from one of the biggest SpaceX bears after this. We are keeping an eye on oil prices today amid a renewed push for a deal between the U.S. and Iran to reopen the Strait of Hormuz. This comes ahead of next week's G7 summit in France. Iranian state media says the draft includes a commitment from the U.S. to lift oil sanctions, and Iran would reopen the strait within 30 days. U.S. President Donald Trump says a deal will be reached this weekend. Shares of Roots are seeing a decline, down 6.5% right now after the Canadian retailer reported a loss in its most recent quarter. Roots says it lost more than $10 million due to higher costs associated with a new distribution partnership and its ongoing strategic review. It has also taken on nearly $2 million in added costs as part of its planned transition to Metro supply chain. On the upside, the company saw sales rise versus the year before. Shares of TMX are getting a lift after the stock exchange operator struck a deal to buy RAFI Indices for $490 million US. It's up about 2%, a little under. TMX says the acquisition will more than triple its Vitafi assets to more than $260 billion. The transaction is expected to close later this year. Market's on a nice rally right now. The TSX is up 1.1% and back above 35,000 south of the border. As everyone awaits SpaceX, you can see lots of positive there. The S&P 500 up by 0.79% as it pushes towards 7,500, and the NASDAQ is up by 0.7 and just below 26,000. Okay, SpaceX makes its long-awaited debut today. Morningstar is out with quite the contrarian call, valuing the company more than 50% below IPO pricing. From how it could impact retail investors to what a potential Tesla-SpaceX merger could mean, joining us now to break it all down is Nicholas Owens, an analyst at Morningstar. Nicholas, thank you very much for joining us.
Roger, thanks for having me.
Do you have to dodge people throwing things at you when you walk around right now? That's what makes you put that number on there, $63 a share.
Well, I think it's useful to point out that it's really the result of mathematics, not skepticism. I really think this company has a massive potential, and in our upside scenario, we would value it at $154 a share. But basically, everything has to go right, and for that to happen, and there's a lot of unproven items in their business plan. So we took a weighted average approach, which gets you to the 63. I'd add to that, this is not a call on what we think their stock will do today. In the near term, the market is very much a voting machine, and I think there's going to be a lot of votes for SpaceX today.
Okay, what are some of the biggest concerns that put it at 63 for you?
Really, the whole business plan depends on two things, which we think they can do, but they haven't been proven out yet. One is high reusability of Starship. So the larger Starship is key to their plan to lower the cost to launch things into space and be able to do more of it at a rapid clip. So if it's survivable, the heat shield is survivable from reentry, and they can use the same ship in hours or days, that's key to their business plan. And that is not something that's been demonstrated today. And the second piece, which is really more about the commercial competitiveness of data centers in space. We think the engineering there, again, is doable, and if anyone can do it, this team can do it. From in terms of radiation shielding for chips or radiating heat out into space, it's really what is the incremental operating cost of that data center once it's up there compared to a terrestrial data center. So we haven't seen that demonstrated, and so we just want to point out to investors that if you buy the IPO price or somewhere near it, you're assuming all those things will be working out, and it's important for investors to know what they're buying or what they're paying for.
Now, and you say they are achievable. What would need to change, or what do you want to see to think that they can actually hit those?
Yeah, we're not debating the engineering or whether it's possible, but rather ultimately our forecast relies on free cash flow to the firm. And so what will be the commercial viability? What's the incremental cost advantage, if any, that a orbital data center has to a terrestrial one, and what kind of market will there be in 5-10 years for renting out gigawatt capacity, to all the providers of people who want to crunch their AI tokens.
And what's it showing for you? Like, will there be a demand for that, or is it? I guess I want to say pie in the sky, but I guess data centers in the sky.
Well, in 57% of the scenarios that we ran, we give that a pretty high percentage of being, let's say, operable for sure, and at least somewhat interesting from a financial competitiveness point of view. There is a scenario where it doesn't pan out. It's not worth it, let's say, to put them in space commercially. In which case, we'd assume that they'd shut the project down or do other things. And yeah, again, the debate here for me is not about whether it's doable physically, but what's the commercial likelihood of it being competitive with a terrestrial data center.
And just going to Elon Musk himself, he has virtual unfettered powers essentially with this company. How are you treating that when you're looking at it as a breakdown?
It's important to point out, like you say, so he has 85% or 84% of the voting shares. And so, for probably a good number of investors, that's a feature, not a bug, right? Mm-hmm. But the point is, if they want to do something with SpaceX shares, maybe go buy Tesla or do other projects, there's no voting against that has any meaning. So, you're along for the ride, if you will.
All right, and for the funds, how are they going to index funds? How are they going to adapt to this IPO and some of the rules and parameters that have been put on?
Yeah, so most of the broad market index funds already had rapid inclusion for IPOs, and what they all mostly do is they do float adjustment. So only about 4.5% of the companies being floated today. Another half or 0.6% could be come online with the underwriters do their overallotment option in the next couple of weeks. And so the weighting in most indexes, other than the NASDAQ 100, which I think is going forward with a higher allocation right away, they'll let's say creep up their allocation over time as the company's float increases.
All right, and the one other question I think a lot of people talked about has been floated, maybe Tesla, SpaceX becoming one. Is that a possibility? Would it happen? Would it be allowed to happen?
I think it's a very real possibility, and I collaborated with my colleague Seth, who covers Tesla here. Operationally, there's a handful of things they're already working on together, like potentially fabricating specialized AI chips and other things. And Tesla is a supplier to SpaceX already. I think the pitch operationally would be we can be more flexible in moving engineers around and sharing IP without any being accused of somehow diverting resources from one company to another if they're all under one roof. It's Tesla shareholders that would have more of a say there, given these voting rights that we just talked about. Elon Musk today controls something like 13% of the votes, and close to 20 if he exercised some options, as far as I understand. And so there would need to be kind of more of a deal making or sort of wooing of public shareholders of Tesla to say what share of the combined company would they be accounting for, and how would they participate in that going forward.
All right, we have to wrap it up there, Nicholas, but thanks very much for joining us.
Thanks for having me. Nicholas
Owens, analyst at Morningstar. Coming up, France's top business lobby is warning new tariffs could ripple across global trade ahead of the G7 meeting next week. We'll have more on that after the break. At a B7 meeting ahead of the G7 summit in Evian, MEDEF's Fabrice Lesachet told Bloomberg that rising tariff risks are adding uncertainty for businesses, with implications for countries like Canada that are closely linked to transatlantic trade flows. Here's more of that conversation.
Yesterday, we gathered with our counterparts from US, Canada, Japan, Italy, Germany, and UK, because it's very important before the G7 that the business community meets, and not only meets, but have some proposals on the very topics that we face at corporate level, which are obviously the tariffs, the energy costs, the artificial intelligence disruptions, the environmental transition, all these things that you know very well, but we needed to take a fresh look on it because the international situation, as you know, obviously, is tensed, and also our governments are not always aligned on everything. And it was very important to come up and show that the business community is united. In fact, we want the same thing for 95% of the topics. And this is important. We are raising the flags on the non-tariff barriers and tariff barriers. It's a lose-lose game, and we see the result already in the United States. We see the results everywhere when tariffs and non-tariff barriers are being erected. And so these are the kind of things we discussed, and also where we agreed.
What is the current level of anxiety in terms of Iran and the continued closure of the Strait of Hormuz? Are we getting to panic stations on this yet in terms of physical oil on the markets? What are you hearing from the business community about that aspect?
No, it was not a panic mode, but it's a very serious concern, and of course nobody knows how long it will be, and also how deep it can go, and that are the fundamental aspects that we don't masterize. But we have some hedging opportunities, and also the situation is different. Asia is more impacted than Europe, for instance, and within Europe, Italy is more, or Germany is more impacted than France, because we have the nuclear energy for electricity, and if you see the spot price on the electricity market in France, it's not the same than Germany and Italy. So I mean, it's a bit different, and you have lots of corporates that are hedged with multi-year contracts for their supply of gas. So it depends if you are energy intensive industry, if you are hedged or not, in what country you are. So it's not a kind of black or white answer. It's vary deeply, but of course it's some concerns. But it's not new. You have Hormuz today, but the tensions, the global tensions were before, and we have some critical raw material. Critical raw materials were a big part of the discussion yesterday and before yesterday, because you have the weaponization, and you see the restriction on exports from China, and the overcapacity also, where a big part, the overcapacity in China was a big part of the discussion. But this is not only for the G7 countries. The issue is for everyone. If you have overcapacity in China producing in 15 years half of the industrial goods of the world, you will have a problem in Brazil, in Egypt, in Indonesia, in Turkey, in US, in Europe, everywhere. So the imbalances were at the heart of the conversation.
Imbalances are likely to only get worse. That feels like it's the narrative. Barriers are being erected. Supply chains are becoming harder. Fabrice, the only way to deal with this for a bloc like Europe, for the United States, for anywhere, is to deliver supply-side reform. Governments, particularly in Europe, have been very bad at delivering supply-side reform over the last few decades. Do you get any sense that that page is being turned, that there is a sense that actually we need to deliver on Draghi, that we need to deliver on this supply-side story? Do you get any feeling that actually we are, centimetre by centimetre, beginning to make progress in that direction?
You know, you are touching really the sensitive point, because you can say whatever you want about China. You can say there is sometimes real competition, but there is also lots of innovation, hard work behind this trajectory. And we did not do our homeworks properly. And it was also with the US when we discussed with them. They say, guys, we told you, you cry about tariffs today, but we told you that you have many regulations that for us are problems, are non-tariff barriers, the CS3 Triple D, the CSRD, all the CBAM, all the green kind of regulation, the digital tax, and so on and so forth. And also you have a very complex market, 27 countries, it's a nonsense. Even the UK for the reset is having a very hard time to discuss with the European Union. And we did not do competitiveness, we did not do innovation investment. When you see Draghi, it's not executed, and later as well, the integration of the single market, and this is a problem. Mario Draghi himself explained very clearly, you cry about tariffs in US, but it's 50% inside the European Union for goods, and it's more than 110% for the services, because there are some protectionism, there are also some consumption protection of consumers, there is environmental health regulations that are non-stop coming in, and it's a constant fight to decrease that flow. And Europe is very complex, we all know this, but they cannot cope to simplify it. They try to do it, they do it a little bit, but it's so small. It's not at the speed of corporate life.
Coming up, we'll see why investors may want to look into options while navigating volatility in the markets. All right, we have breaking news for you right now. SpaceX is officially trading now on the NASDAQ. And the bell, it just went, we heard all kinds of applause and clapping at the NASDAQ as it started trading. And it's at 150. It opened at 150 a share, which is about 11% above what they were expecting. I think 135 was the original. But SpaceX is now available, and it is moving. And we'll have more on this, of course, throughout the day. Well, the markets, meanwhile, are feeling shaky. And there you go. It's at 152. It's up 12.5% from what it started at. And it looks like it may go a little higher as well. We'll see how the day unfolds. Well, the markets may feel a little shaky. The VIX, it's been rising, so this may not be the time to pay full price for stocks. Instead, strategies like selling puts and calls can help you target prices you like and collect income along the way. We got more from Greg Newman, Senior Wealth Advisor and Portfolio Manager at Scotia McLeod.
There are times when markets are off, or there's just outstanding value and you can just go in and buy. And we talk about that all the time. Buy here, wait to buy at 10% lower, that sort of thing. But what do puts and calls do? I mean, first of all, you're going to have a real nice tape today, right? Probably, at least at the start of the morning. So, look, you've had this enchanted run with the Canadian banks, and like Royal Bank, for example. I still like the sector. I still think they're going higher. But let's say you've got a little too much Royal Bank and you don't mind maybe selling a little bit at $280, $290, $300. Right now, you can oblige yourself to sell Royal Bank at $280 between now and the end of December, get paid $1,300 a share. So if you got, 100 shares.
$1,300 a share?
You could get, $13 a share.
$13, okay.
$13 a share.
Okay.
Thank you for clarifying.
No worries.
So therefore, $1,300 is what you can get by selling a call
100 shares,
on 100 shares. So not bad. I mean, for something that you were going to sell anyway, you're effectively out at $293. Not saying you want to sell yourself. I'm just saying in markets that are cresting like this and you're looking to take some profits and add some downside protection by taking in this premium that you're going to bank, it's a good way to go. And, for days like yesterday and the day before, when markets were really hitting the skids and we didn't know just how deep this correction was going to be, you take a look at something that Jensen Huang just said is going to be the story of forever and going to make $500 trillion GDP. And he talked about Marvell, which is a great story on a price to growth basis, doing a lot of exciting things. Of course, it was like $190 about a week ago, and then it was up to $300 a few days later. But it is a story that you want to own, right? Lately, it's been $250. How about obliging yourself to own it between now and the third week of December for $200? So way lower, just way lower than it is now, and you get paid about $39 a share. So $3,900 on 100 shares. So really not a bad deal to be collecting all this premium. The biggest risk is.
I was going to say, what are the risks with this?
Okay, what are the
Everything
catches?
sounds too perfect.
Okay,
so what could go wrong?
The
what
risk
could cost on that one?
in Royal is that you don't really understand what you're doing, and then Royal goes to $400, and you say, "Where's my shares?" And it's like, "Oh, you got out at $295 effectively." What's the risk with Marvell? Well, you get put in at $200. You think that that's grand, and then all of a sudden Marvell goes back down to 80 or 60, or we go over the top, like the way we did in the dot-com era, and then so you have to write puts. People often, what they do is they get excited by the volatility, they get excited by the premium, and they say, I want the stock with the greatest amount of premium, that's what I want to take in. But then they're not really loving the name. You really want to love the name. So you really have to be, okay, I'm a buyer of Marvell at 200, less the premium. Of 160, let's call it. And I'm okay if the stock goes to $80 because I'll end up buying more, that sort of thing.
So essentially, I mean, the big thing is removing emotion, isn't it? And when you're doing this, you are stripping numbers down and looking at the numbers, aren't you?
Yeah, and the other risk is really when you collect premium and you write puts, often what happens, especially with the good stories, is you get the premium. The premium's nice, but you don't end up getting put in often, most of the time. So then Marvell keeps going up if Jensen Huang is right, and it goes to 500, 1,000, 2,000.
Yeah.
You've gotten the little, tidbits, and you haven't really gotten the full meal, the fulfilling story of owning the stock. So that's the other danger. You don't really get the full upside. But in very skittish markets, the point of puts is you really want to identify, okay, these are the stocks I really like. I like them at this level. Give me some premium.
All right. And do you look beyond the headlines at that, or do the headlines matter too?
Well, listen, always we're trying to dig behind the headlines and really figure out.
But are they part of it though too?
Sure, because the premium, the headlines are driving the volatility. The volatility is driving the premium that you're going to get. So for sure, the headlines are important, but you always want to really understand what you're going to be owning, and you want to understand the sum of parts. And so, look, picking stocks to me is like panning for gold. It's kind of boring. You're just going like this.
Shake.
Shake. It's like, no. And then you find one, and you find.
Then you got to make sure it's not fool's gold.
Yes, and you got to find out, you got to find one that is sleepier. The market isn't quite seen. Maybe it's had a move, but it hasn't had a big enough move, or maybe it's just being ignored. But that's the process.
And what makes it sleepier to you? Like, what draws your attention to the sleepy ones? What are the things you look for when you go, okay, now let's go?
It's the most exciting part of what I do. So it's kind of boring. You're going, shake. And then all of a sudden you find something and you think you see something that really not too many people are looking at. Maybe you don't want to say you're the only one doing it, but let's say you're the third percentile or the sixth percentile. When you see that, you can really score big points for clients, and that's the name of the game.
But is there any one thing that draws you to it, or is it just
that's a great question. It's that is the love of the game. I mean, really, it is. It's a sport in a way, and trying to figure it out before the crowd. I mean, because listen, there's hundreds of millions of people playing this game, right?
Yeah.
And there's a lot of really good minds, and how many analysts are covering Apple and everything? Is there really a time when you're going to see something that they're not going to see? So it's going to be harder to do it with a stock like Apple, but there's tons of companies, in the mid caps and the S&P or in the TSX, which are smaller companies, where markets are starting to sufficient, coverage isn't that as robust as is there. So you can find a lot of those opportunities with the TSX.
All right, that was Greg Newman, Senior Wealth Advisor and Portfolio Manager at Scotia McLeod. Let's take a quick look at the markets, see how they're faring today. Bay Street and Wall Street. And you can see TSX is up by 0.89%, S&P 500 by 0.32, NASDAQ Composite. It's about a wash right now with the launch of SpaceX. It's trading at about 150 at the opening. It climbed as high as 163, which turned Elon Musk into a trillionaire. But it's since backed off a little bit. It was interesting for the launch. Gwynne Shotwell, the president, and Chief Financial Officer Brett Johnson were there, along with Musk's mother. But Musk was back at the base, the company's headquarters in Starbase, Texas, and they were launching 29 Starlink satellites. They went up about an hour before they started trading. On the TSX, a quick look. Let's pull up the gold numbers here for a quick second here. And you can see some of the precious metal stocks surging nicely today, including Montage up by nearly 9%. And market calls coming up next. Today on the show, we have Richard Orr, Portfolio Manager at RN Croft Financial Group. His focus, exchange-traded funds. That's it for Morning Markets. Thanks for watching. We'll see you back here on Monday.